Hello, I'm Tim McCleary. Today I'm sitting with David Steele, co-GP and co-founder of Western Wealth Capital. David, Western Wealth Capital is an amazing story. Tell us a little bit about Western Wealth Capital, its history, and its track record.
Well, thanks, Tim. It's actually been quite amazing. Western Wealth Capital has been around for about 5 years, and in 5 years we've acquired 66 properties across the U.S. in Phoenix, Dallas, San Antonio, Houston, and Atlanta, all multifamily apartment buildings. Over the last 5 years, the 66 buildings, we've bought, renovated, fixed up, and sold 30 of them, and our investors on those investments have averaged an annualized return of over 30%. So the program has worked very, very well. It's a pretty simple formula. We'll talk a little bit about it today, but it's a repeatable, scalable formula that we've had great success with, and our investors have done very well investing alongside us.
So what cities are you currently, what cities do you currently deal in, and what cities are you currently hold properties in?
Yeah, so as I mentioned, we're in the 5 cities. There's about 14 different cities that we look at. And really, fundamentally, where we're looking at is we're looking at the highest growth markets in the U.S., cities where people are moving to because there's tons of jobs being created. So we're looking, wherever there's large population growth and job growth. And typically, people are leaving San Francisco and Los Angeles because the average rent on a 2-bedroom in San Francisco today is $4,200 a month. So the companies are moving to Phoenix, Dallas, Houston, Denver, these kind of cities. And we're going in and we're buying B and C buildings in these cities, and we're fixing them up and moving them up to a standard that the people that are moving there want to live in, and those are the kind of places they want to rent.
So Dave, what cities does Western Wealth Capital hold assets, and how do you find these assets?
We're really focused, as I mentioned, on the 5 cities. There's about 14 cities in the U.S. that we really like, and they're all driven by the same thing. What cities have the largest population growth and job growth? Where are the employers moving to? Because if the employers are moving and hiring in those cities, that's where we want to be, and we want to be taking the housing, the B and C apartment buildings, and buying and fixing them up. So Houston, Dallas, San Antonio, great markets. This will be the 9th property that we're buying in Houston, called Central Park Regency, and it's a 348-unit building, and it completely fits our model. It's a 1983 vintage building, and most of the units are in the same condition that they were in when the building was built. So when you go inside, it's got that old carpet, it's got the bathroom that you and I wouldn't want to rent in. So we go in and we have what we call a gold star renovation, where we go in and we completely renovate the suite for about $6,000, and that generates us about $125 to $150 rent increase. We typically put in washer dryers. That generates about $40 to $50 a month, and then we go in and we completely reposition the whole property. We redo the leasing office, put in a clubhouse, redo the parking lot, new signage, new pool furniture, paint the building. And when we take that B building and we make it a B plus, all of a sudden, we can get a significant increase. We're typically taking about an $800 or a $900 per month rent, and we're moving that up over a 2 to 3 year period up to $1,100 or $1,200 rent. So it's a full repositioning of the property, and when you're able to get that kind of rental increase, it translates into about 100% return on your capital as an investor.
Wow. So if I decide I want to invest in one of your properties, it sounds fantastic. How do I, as an investor, get paid?
Yeah, so we have about 1,000 individual investors, both in Canada and the United States. To be an investor in the program, you have to be an accredited investor. So there's qualifications in Canada to be accredited. There's qualifications in the U.S. If you talk to Cynthia, who's with TriView, who's the dealing rep for TriView, she'll walk you through all the requirements to be an accredited investor. But once you're an accredited investor, then you can decide to invest in one of these projects. We typically buy about 10 of these buildings a year. So each investor will see about 10 opportunities a year, and we really encourage people to sort of allocate an amount of money towards doing this. Maybe they allocate across 3 or 4 or 5 deals. Some people will do an allocation across 10 deals, but they'll say, I'm going to put in $25,000 a deal or $50,000 a deal. We have investors that are doing $500,000 a deal. But obviously, for most people that are looking to invest, they get comfortable with a number and then they allocate across these deals, and then they're also able to diversify across a number of different properties. So each property, we structure an individual limited partnership, one partnership in Canada, one partnership in the US, and the investors come into each individual property, and then they do it multiple times. So a lot of people say to me, geez, Dave, every time you send me the executive summary and the marketing material, this one looks exactly like the last one we did or the one before. And in a lot of cases it does, because it's exactly the same formula. We're literally doing the same things over and over. We're finding buildings that need to be painted, renovated, suites need to be renovated. And the key to our system is we can just do it really, really fast.
So should I expect like an annual distribution, and what's your exit strategy?
Yeah, great question. So on November 30th of every year, we pay an annual distribution. Most of the deals pay out on an annual basis on your cash-on-cash return, just the rent minus the expenses. You're getting an annual distribution of 3%, 4%, 5%. In the first couple of years, it's a little bit lower. It grows as the time goes on, because we're not out to distribute a lot of cash in the early years. We want to pour all the money back into renovating the suites and really increasing the building. Because if you think about it, what we're doing is we're taking this kind of ugly duckling of a building, and in 2 years from now, it's a beautiful apartment building that you would say, wow, if I had employees living in that city, I'd want them living there. If my kid was going to college, I'd want them living in that building. So each year we pay out an annual distribution of 3%, 4%, 5% a year. And what's really cool is that in the US, we're able to get financing, and the financing works that each year as we increase the value of the building, the lender will reappraise our building at the end of every year. And if we've increased the value of the building, they'll increase the loan by 70 or 75% of the value we increase the building, and they'll increase our loan. So we take that capital and we give it back to the investors to repay their equity. So in most of the deals that we've invested in, the investors are seeing a return of their capital of about 50% of their capital returned back to them by refinance at the end of year 2 or 3, another 25% by the end of year 3 or 4, and another 25% by the end of year 4 or 5. So all of a sudden you're sitting there at the end of year 2, if you've put $100,000 in, you've now got $50,000 back, and at the end of year 3, you've got another $25,000 back, and at the end of year 4, you've got all your money back. And at that point, you're still getting your annual distributions on 3%, 4%, 5% on money you no longer have invested. So it's really a powerful program, and again, it's why we've been able to raise from 1,000 investors close to $200 or $300 million of equity to go into these deals, because a lot of investors come down on our discovery trips. They see it, they see firsthand just how scalable and repeatable it is. And I've been doing this for 30 years in the real estate business, and I've honestly never seen anything this good.
In your exit strategy, do you have a 3, 5, 7, 10-year window that you're looking at?
Yeah, so when we first got started, we've sold 30 of the 65 deals that we've bought, so we've disposed of 30 of them. As I mentioned, the average time we held those was about 30 months, and the average return was over 30% a year to the investors. So the returns have been great. The challenge now is that, it's a good challenge, is that as we're going forward, because the refinance program is working, many of the investors don't want to sell the buildings. They're looking now and going, wow, I've refinanced, I've got back 50% of my money, or 75 or 100% of my money, and I've taken that money and I've either reinvested it with Western Wealth, or I've gone and reinvested it elsewhere, and now I'm getting this 3%, 4%, 5% a year on money that I no longer have invested. Why would I ever want to sell this investment? So although we have a great track record, and there's a very detailed little executive summary that shows the track record of every deal, how long we've held it, what the returns are. So it's a great thing to look at. But what I would really say is that as we go forward, I think we'll be much more focused on refinancing these and holding on to them, as opposed to exiting and selling them the way we've been doing it.
Perfect. So just to clarify, if I'm looking at investing, the process is?
The process is really simple. You'll have contact information within this material to contact Cynthia Asen or Taylor Steele with TriView Capital. They are the dealing reps of TriView, who's an exempt market dealer, so everyone going through needs to invest through an exempt market dealer, and they're available to answer any questions. They have a process called the Know Your Client form that they'll get you to fill in and just walk through and then answer any detailed questions. TriView Capital and Cynthia and Taylor, I'm going to say, have 300 clients that have invested with us. So they have very, very happy clients. If you want testimonials or if you want to talk to any of the clients, if you want to talk about any of the past projects, I know they've both invested in these projects as well. So any of that kind of thing, there's very good information to be able to talk to them and answer any more in-depth questions.
Fantastic. Thank you, Dave. Thank you for joining me today.
Really appreciate it. Thanks, Tim.